Good morning, everyone. Let's start with CA Foundation September 2025 RTP. As the exams are approaching near, we'll quickly have a recap of the entire RTP question to question. One by one question we'll discuss, and let's have a detailed information about each and every chapter. So let's start with question number 3 of the RTP September 2025. Now, question number 3A. You are required to pass necessary journal entries for the following. Employees had taken stock worth 50,000. Cost price 45,000 on the eve of New Year. And the same was deducted from their salaries in the subsequent month. So employees took away goods and worth 50,000, whose cost price was 45,000 on the occasion of Diwali. And the same was adjusted with their salary. So what should be the journal entry? Salary account debit to purchase, because it is expense of the business and goods are going out of the business. So salaries to purchase. This is the entry number 1. Fine. Let's go to next. Wages paid for erection of machinery 16,000. So for installation of machinery we have paid wages. So entry should be machinery to bank. Machinery to bank or cash. Machinery to bank or cash. Yes, correct. Next. Withdrawn for personal use. Goods. Sales price 8,000. Cost price 6,000 and cash also withdrawn. First of all, guys, always goods should be recorded at cost price. Cost price. So basically the proprietor has withdrawn goods also and cash also. So drawings account debit to purchase to cash. Drawings account debit will be 7,000, that is 6,000 plus 1,000, 7,000. To purchase 6,000 and to cash 1,000. Let's check. Yes, the same entry is here. Fine. Next, purchase of goods from Sandeep of the list price 60,000. So we purchase goods from Sandeep for 60,000. So basically, whenever any party's name comes, it is a credit transaction. He allowed 10% trade discount. This is never recorded in the books of accounts. So what is the net purchase amount? 54,000. 54,000. 1,500 cash discount was also allowed for quick payment. So guys, while reading the initial question, it looked like a credit transaction, but he immediately gave us 1,500 cash discount. So basically, this is a cash transaction only, guys, because when cash discount is given or received, when we give immediate payment or when we receive immediate payment. So basically, we have purchased goods from Sandeep for cash only. So the entry should be purchase account debit to bank to discount received. Purchase account should be 54,000. Bank should be 52,500 and discount receipt 1,500. And the last transaction, purchase second hand machinery from Jawahar Industries for 3 lakh. So we have purchased machinery from Jawahar Industries. Again, it's a credit transaction because party's name is coming. Plus CGST and SGST 6% is. We paid GST 6% each, means total GST we paid 12%. Paid 1 lakh immediately by check and balance should be paid after 2 months. So this is a partly cash and partly credit transaction, guys. We paid 1 lakh on the spot through check and balance after 2 months we are going to pay. Basically, what do we purchase? Machinery. So the entry should be machinery account debit, input CGST account debit, input SGST account debit to bank account to Jawahar Industries account. Machinery account debit, input CGST, input SGST to bank to Jawahar Industries. Machinery was 3 lakh, 6%, 18,000 GST, respectively 1 lakh paid to check, and this is the balancing figure. Balancing figure is payable within 2 months. So this was the journal question, very simple question asked by the ICA. Let's go for the next question, that is capital revenue expenditure. Classify each of the following transactions into capital or revenue transactions. Fine. Inauguration expenses of a new manufacturing unit in the existing business. In the existing business, we introduce one new manufacturing unit. Is it a capital or revenue? Let's check, guys. It's a revenue expenditure only because it is existing business, nothing new. You introduce a new unit, it does not increase the overall efficiency. New manufacturing unit means we have 2 units. We introduce a new unit so that our production runs smoothly and everything goes smoothly. It is not increasing the capacity of the business. So it's a revenue expenditure. Done. Installation of a new central heating system. New system only introduced. This is a capital expenditure. It is introduced only one time or it is installed only one time. Fine. Next. Providing drainage for a new piece of water extraction equipment. Again, this is a capital expenditure. Here it is. Why? Because what they mentioned, providing drainage for a new piece of water extraction equipment. New equipment purchase, for that we introduce a new drainage pipe. So that's a capital expenditure. This is not done every time in the life of the company. An extension of railway track in the factory. Again, capital expenditure, because this railway tracks or installation of tracks is not a regular activity. It's installed on that the trains can run frequently. So it's a capital expenditure. Next, carriage cost on replacement part for a piece of machinery. Carriage cost on replacement of part of machinery. This is purely a revenue expenditure. This is a transportation cost incurred by the business for replacing the parts. So it's a revenue expenditure. So very simple question asked on journal and capital revenue expenditure. Let's move ahead for the trial balance part. One of your clients, Mr. Hari Om, asked you to finalize his account for the year ended 31st March 2025. As a basis of the audit, Mr. Hari Om furnished the following statements. What they've asked. Check the accuracy of the above trial balance and give reasons for the errors if any. Okay, fine. Now Hari Om's capital, it should be credit. Hari Om's drawings, debit. Leasehold premises, debit. Sales, credit. Dues from customers means receivable from customers. It should be debit. It should come here. It's wrongly given here. Purchase is debit. Purchase return credit. Again, it is wrongly posted by Mr. Hariom. Loan from bank, credit. Trade expense, debit. Trade payable, credit. It is wrongly posted. Bills payable, credit. Wrongly posted. Salaries and wages, debit. Cash at bank, debit. Opening inventory, it should be debit. Wrongly posted by Hariom. Rent rates, debit. Sales return, it should be debit. Wrongly posted by Hariom. So these are the errors committed by Mr. Hariom. So they are requesting us to draft a new trial balance after rectifying the errors. The closing inventory was 8612. Whenever closing stock or closing inventory comes in the adjustments, it need not be incorporated in the trial balance because journal entry for the same has not been passed. Journal entry for the same has not been passed. Hariom claims that he has recorded every transaction correctly as the trial balance is tallied. So the client says that I have recorded every transaction because my trial balance is tallied. But the answer is no, you have recorded everything, but boss, you have not recorded all transactions correctly. So you are supposed to rectify the same. So this is the rectification with the red marks. They have to do it properly and then tally the trial balance. They have mentioned the reasons also. The reasons will be very simple. The balances are given opposite, so they should be given the correct balances. That's it. Let's go for next for rectification of errors. Write out the journal entries to rectify the following errors using a suspense account. Fine. Goods of the value of 15,000 written by Mr. Aman were entered in the sales book. Oh, sales return has been done because customer returning goods were entered in the sales book and posted therefrom to the credit office account. Okay. So what is the correct transaction actually? Basically it is sales return account debit to Aman. What actually happened was entered in the sales book and credited to his account. So credited to his account. Fine. So basically it is entered as sales and credited to his account. So here it will be suspense. 15,000. Here also 15,000. Sorry. Here 15,000. 15,000. Here it will be 30,000. Reverse this entry. Aman account debit. Sales account debit. To suspense. 30,000. This Aman gets cancelled. That's it. Final entry will be sales return account debit, sales account debit to suspense. Let's check. Correct. 15, 15, 30. I hope this is clear. Now, an amount. So guys, what here happened? Basically, a goods written by customer were wrongly shown as sales and wrongly credited and correctly credited to his account and posted therefrom to the credit office account. Means what error did we did? Sales written shown as sales, but party's account correctly posted. So this is nothing but error of commission. An amount of 7,500 entered in the sales return book has been posted to the debit of Mr. Ashish who returned the goods. So one sales return happened and party's account was wrongly debited. Fine. Transaction 2. Sales return account debit to Ashish. $7,500. This is just a working, guys, I'm showing to you. You have to write properly. What wrong happened? Okay. Mr. Ashish got debited. So sales return to debit only. Ashish also got debited. And to suspense. 15,000. reverse this entry. So suspense account debit to sales return to Ashish. Now let's see what gets cancelled. Final entry will be suspense account debit to Ashish 15,000. Yes, correct. Total of the discount allowed column in the cash book for the month of June 2025 amounting to 27,500 was not posted, though correctly recorded in debtors. Discount allowed given to the customers, not recorded in discount allowed, but correctly recorded in the debtors account. Fine. So what should be the correct entry? Discount allowed account debit to debtors 27,500. What is the wrong entry? What wrong did they do? They did not record discount allowed. So basically, two debtors. What is my second rule? Do whatever wrong they have done and keep the correct thing as it is. Wrong what they did not debit a discount allowed, but data as it is. So here suspense. Then data account debit to suspense. Here data gets cancelled. Discount allowed to suspense will be the entry. Yes, correct. Next transaction. Bad debts aggregating 8,000 were written off during the year in the sales ledger. Bad debts amounting to 8,000 were written off in the sales ledger, but were not adjusted in the general ledger. Sales ledger means they were recorded in debtors ledger, but they were not recorded in bad debts account. Okay, fine. So what should be the correct entry? Sales ledger means debtors ledger. Bad debts to debtors. Correct entry will be. What is the amount of bad debts? Let me check. 8,000. Were correctly entered in the sales ledger. So it was entered in debtors account, but not entered in the general ledger. General means bad debts. So there comes suspense. Then debtors to suspense. Debtor gets cancelled. Bad debts to suspense should be the entry. Yes, guys, correct. So, guys, what you need to remember here: sales ledger means debtors ledger, and general ledger means any nominal account which is there in the transaction. So, this was important according to me. And a sale of 30,000 made to Miss Avia was correctly entered in the sales book. So, we have sold goods to Miss Avia and we have entered in the sales book, but wrongly debited to the debit of Miss Adya as 3,000. Fine. So, the correct entry should be Miss Avia to sales. Miss Avia to sales 30,000. What wrong did we do? We debited Miss Adya as 3,000, but we kept sales as it is. Sales was as it is recorded. So here comes suspense for 27,000. Then reverse sales account debit to Miss Adya to suspense 30,000, 3,000, 27,000. Sales gets cancelled. So the final entry will be Miss Avia account debit 30,000 to Miss Adya 3,000 to suspense 27,000. Now it's perfect, I think. Yes. Some interpretation problem happened in the while reading the transaction. So please take care of this. This was nice. So goods sold to Miss Avia for 30,000, correctly entered in the sales book, but wrongly debited to Miss Adya as 3,000. So the customer name also entered wrong and the amount also entered wrong. This is pure error of commission. Supplier account was overcast by 225. Supplier means creditor. Creditors have credit balance. We have shown more credit balance. So we have to debit supplier. So basically it will be supplier account debit to suspense final entry. 225. That's it. This is rectification of errors from my side. Now let's go to bank reconciliation statement. The cash book of Messrs. Muzzers shows 27,570 as balance at bank on 31st March 2025. But this did not agree with the balance as per bank statement. So guys, this is basically balance cash book of Messrs. Muzzer shows balance at bank means this is basically balance as per cash book given. I'll show this with my working note. This is cash book. This is passbook. I'll prepare this working. This is debit. This is credit. This is debit. This is credit. This is receipt, issue payments, withdrawal deposits. This is balance as per cash book given. So not cash book normal balance is debit. So I'll put a minus sign there, then plus, then minus, then plus. Now let's record the transaction one by one. Subsidy 10,250 received from government directly by the bank. Who received the subsidy? Bank. Bank means passbook. Passbook means deposit side I will go because received by government 10,250. Directly by bank means passbook. Bank means passbook. Passbook means deposit side. On 15 March 2025, the payment side of cash book was undercast by 350. Payment side of cash book was undercast by 350. Payment side of cash book undercast means we took the payment side lower. So which side we took higher? The receipt side. So we'll record here 350. On 20th March 2025, debit balance of 2156 was on the previous day. Means there was debit balance of 2156 was brought forward as credit balance in the cash book. So debit balance wrongly shown as credit balance. So can I say posting on the wrong side results in double amount difference? I should have written that 2156 on the debit side. Rather than writing on the debit side, I wrote on the credit side. So means I should have written here. But where did I wrote? Here. So a posting on the wrong side, a posting on the wrong side. Guys, listen to me very carefully. I should have written on the debit side, but something which I don't write on the debit means indirectly I'm giving a credit effect. So one effect of not writing on the correct side, that is 2156. And the other I wrote on the credit side. So sir, a posting on the wrong side results in double amount difference. Double amount difference. 2156 into 2156 into 2, that is 4312. 4312. Something which I don't write on the debit is nothing but credit given, and I went on the credit side and wrote also what 2156. So one effect of not writing on the debit 2156 and the other effect that I officially wrote on the credit side. So a posting on the wrong side results in double amount difference. Now let's go ahead. A customer of Messrs. Muzzers who received a cash discount of 5% on his account of 2000. Means I had a customer from whom I have to receive 2000 rupees. I received a cash discount of 5%. Paid to Messrs. Muzzers a check on 24th March 2025. So I was supposed to receive from my customer 2000. I gave him a discount of 5%. So but obviously he'll give me a check of not 2000 and 2000 minus 5%. That is 1900. But what happened? Cashier erroneously entered the gross amount in the cash book. My accountant by mistake entered full amount in the cash book. So basically my accountant means me means cash book. So I recorded 2000, but how much check did I receive? 1900. That is 2000 minus 5%. So bank will credit how much amount in my account? 1900. So I can't record on both sides the amounts. Basically BRS is prepared for timing difference. There is a timing difference between cash book and passbook. So to reconcile the difference we prepare BRS. So basically I'll write 100 rupees on the receipt side because there is a difference between me and passbook for 100 rupees only. I recorded 2000, bank recorded 1900. So basically the difference comes to 100 rupees only. Next, on 10th March 2025, a bill of 5700 was discounted from the bank. So I discounted the bill with the bank because I was in need of money. Entered in the cash book, but the proceeds credited in the bank statement amounted to 5500 only. So basically the meaning of the sentence is I discounted a bill of 5700 with the bank. I recorded in the cash book 5700. But bank credited how much? 5,500 only. So I discounted the bill with the bank. Means I sold the bill to the bank and I got money. I means cash book. I got money means a receipt. How much? 5,700. But bank credited. Bank means passbook. Credited means deposit side. How much? 5,500. Again, I cannot record both transactions in both the books. So basically the difference between 5,700 and 5,500 is 200 rupees. I recorded 200 more. So in cash book 200 should appear on the receipt side because it is having a higher side. Next please. A check issued amounting to Ravi for 1725 returned marked out of date. Returned marked out of date. No entry was made in the cash book. So I issued a check to Ravi. The check got expired. I have not made any entry. So basically, whenever I issue a check, I record on the payment side or the issue side of the cash book, but I have not made any entry. So basically, bank is supposed to pass an entry. Actually, bank is supposed to withdraw money from my account, but since the check has been marked out of date, bank will deposit the same amount in my account because bank will not debit my account only because it is expired, it is marked out of date. I hope it is clear. Insurance premium 900 paid by bank under a standing order. No entry is made in the cash book. So we have not made an entry. So bank has paid insurance premium. So bank pays. So bank withdraws from my account. So 900. Next, a bill receivable of 1530 discounted for 1500. Again, a bill of 1530 discounted by me with the bank and I got 1500 with the bank has been dishonored. So I discounted the bill of 1530 with the bank, got 1500. When bank went to customer to collect the money, customer said no, I will not pay you the amount. But the advice was received on 1st April. And I came to know that the customer did not pay the amount to the bank on the next month. So basically, this is dishonor done by the bank. So basically, this is not entered by me, not recorded by me. Dishonor activities are done only by the bank. That is the passbook. So where should we record? Passbook withdrawal side, and that will be 1530, not 1500, because bank will recover full amount from me again. Because I was in need of money, so bank gave me 1500 instead of 1530. Now, since the check is dishonored, the bill is dishonored, bank will recover full amount from me. And the last transaction, bank recorded a cash deposit of 1650. Bank recorded a cash deposit of 1650 as 1560. So I deposited cash of 1650. So I means cash 1650. But bank recorded how much? 1560. So bank will record where? On the deposit side. So again, both parties cannot record. So there is a timing difference between me and bank of how much? Of how much? Let's see. 1650 actual deposit was 1650 and bank recorded 1560. 90 rupees difference comes there. 90 rupees difference comes. So let's record this 90 rupees here. So this is 1650 minus 1560. This is how we are supposed to record the BRS. Now let's see all the effects whether we have given properly or not. Starting balance 27,570. Let's take all add items. 4312, 10,250. Yes. And 1725. Yes. The grand total. This is the total. Next, the less items. 350, 100, 200, 900. Let's take from here also. 200, 900, 1530 and 90 should also be there. Yes, all are there. So we get this, and this is the balance as per passbook. So we have recorded, we have done BRS also from the RTP. A very nice question, we can say. You can have a glance of this working note properly. Now we'll go with valuation of inventories. From the following particulars, ascertain the value of inventories on 31st March 2025. Fine. Inventory on 1st April 10 lakh 50. This is opening stock. This is purchases. The sales, manufacturing expense, this will be ignored. Selling and administrative expense, this will go to P&L account. So that will be ignored. So now at the time of valuing inventory on 31st March 2024, means when we were valuing closing stock of last year, we can say this opening stock of current year also, right? A sum of 60,000 was written off. means we have written it off, means we feel that we'll not get 60,000, we'll not get 60,000 rupees on a particular item which was originally purchased for 1,65,000. So can I say this is cost price, this is written off value, means original cost was 1,65,000, we thought that we'll not get 60,000 of the stock was sold during there for 1,50,000. So this is selling price. So basically this is cost price, this is selling price, and this was written off. So 1,65,000 we had purchased in the during the year. We feel that due to this abnormal goods, 60,000 will not be received. So what is the value actually? 1,65,000 minus 60. The value is 1,05,000. So when we were valuing closing stock of last year, we had purchased certain goods costing 1,65,000. We had written it off by 60,000. So the value we had ascertained is 1,05,000, and it was sold for 1,50,000 during the year. Okay, fine. Now, except for the above mentioned transaction, gross profit earned during the year was 20% on sales. So now, what we are supposed to do? We are supposed to prepare a trading account. Let's see what they have done. They have prepared the statement. I'll prepare a trading account for you guys. This is question number 6. This was question number, BRS was 5. This is question number 6. I'll prepare a trading account for you people. What we are supposed to do? Prepare trading account and record all things, so that it becomes very simple for the students also. To opening stock. So when we were valuing stock of last year, we found some abnormal goods. We were valuing inventory on 31st March 24. We found some goods, right? Whose cost price was how much? 1,65,000. We had written off by 60,000. So the value was 1,05,000. So while valuing closing stock of last year, we found some abnormal goods. So obviously, if closing stock includes abnormal goods, opening stock of current year also includes abnormal goods. And from stock, we are supposed to remove value. So 10,50,000 minus 1,05,000 I'll do. Because the value we have ascertained is 1,05,000. How 1,05,000 came? Guys? This is 165 minus 60,000. I hope it is clear. So 10,50,000 minus 1,05,000. 9,45,000 will be my opening stock. Fine. What is the next item? 2 purchases, 36 lakhs. What is the next item? Sales. How much sales? 55,50,000. And we have sold for 1,50,000. So my sales also include abnormal goods sold. So 55,50,000 minus 1,50,000. Because abnormal goods sold included in normal sales, so we have to remove that. So let's find out what is the scenario. Okay, so this is for 55,50,000 minus 1,50,000. 54 lakh will be my sales. Fine. Then manufacturing expenses recorded on the debit side. How much? 3 lakh. Admin and selling expense will not be recorded because we are preparing trading account. That's it. We have GP ratio of 20% on sales. So we are supposed to find out 2 things now. One is the gross profit and the closing stock. This is how you can prepare. So they have told gross profit is 20% on sales. So let the sales be 100, profit 20, cost 80. We have sales of 54 lakh, which is of normal goods. So we can find out GP 54 lakh into 20 upon 100. So basically 54 lakh 20%. Let's calculate. This comes to 10 lakh 80,000. And now we can find out closing stock also. So 9 lakh 45. plus 36 lakhs plus 3 lakhs plus 10 lakh 80,000. 59 lakh 25 is the total. Minus 54 lakh. 5 lakh 25 is the closing stock. So this is the value of stock. This is the value of normal goods stock. So this is how we can prepare. This is how we can prepare, guys. This is how we can prepare. So no need to prepare the solution. They are prepared. You can prepare in this way also. We can check the answers. 5 lakh 25 will be the stock. Yes, we have got it. Now let's go to the next question, guys. Very nice question. It was of inventory. Normally they ask this question, such type of questions only. That is abnormal goods or physical stock verification. Now let's go ahead, guys. The next question comes of depreciation. Of machinery purchased on 1/1/2021 for 1,94,000 and spent 6,000 on erection. So what is the cost price of the machine? 2 lakh rupees. On 1/7/21 on the same year, additional machinery costing 1 lakh was purchased. So another machine was purchased. So machinery account debit to bank. On 1/1/23, now after 2 years, 21, 22 and the third year, 23. Machinery purchased on 1/1/21, this one have become obsolete and was auctioned for 1 lakh. So this was sold. So machinery first was sold for 1 lakh. On 1st July 2023, a new machinery was purchased at a cost of 1 lakh 50. Again, a machinery was purchased, so machinery account debit to bank. Depreciation was provided annually on 31st December at the rate of 10% per annum on the original cost of machinery. So they are following straight line method. In 2024, means year number 4, change the method of writing of 15% in WDV, show machinery account in the calendar year 21 to 24. So now what they have done, they started purchasing machinery, they started charging depreciation at straight line method for the first year. In the fourth year, they decided to change the method from straight line to WDV. So they are expecting us to prepare a machinery account from 21 to 24. Let's prepare it. Here we have the answers. Right? Here. Yes. So this is what is prepared by Institute. Now, first they purchase a machinery. So 1 lakh machinery account debit to bank. This is 2 lakhs. In the same year, they purchased one more machine for 1 lakh. So machinery account debit to bank on 1st July. So this year is over. In the first year, 2 machines were there, 2 lakh and 1 lakh. 2 lakh full depreciation will charge. What is the rate of depreciation, guys? 10% per annum as per straight line. 2 lakh 10% 20,000 and 1 lakh 10% 10,000 and 10,000 half is 5,000. So 20 plus 5, 25,000. They must have prepared the working notes also here. Yes. So 2 lakh machinery full year depreciation and 1 lakh machinery which we purchase half year's depreciation. So they will get the totals and we'll get the balance carried down. 275. This will be brought down. In the second year, what did they do? In the second year, they didn't do anything. I think in the second year, let me check. Here they purchased. Here they purchased. No, second year nothing happening. So second year will charge depreciation. What is the entry for charging depreciation? Depreciation account debit to machinery account. Total 3 lakhs, 10%, 30,000. And this is balance carried down, 245. This will be again brought down here. I think in the third year they sold. Yes, the first machinery. On 1/1/23, first day of the year, they sold the first machinery purchased for 1 lakh. The first machinery which was purchased for 2 lakhs, they sold for 1 lakh. So now here we'll need to prepare the working. They must have prepared the working here. Original cost 2 lakh. First year depreciation 10% 20, second year 20 40. So they have calculated together 20 20 since it is straight line method. So 1 lakh 60 is the WD. So 2 lakh first year 10% 20, balance comes to 180. Then again 2 lakh 10% 20, so total debris 40, balance comes to 160. How much it is sold for? 1 lakh. So it is loss on sale 60,000 rupees. So guys, the first machinery which was purchased for 2 lakh, they have sold for 1 lakh in the year number 3. So we have to pass 3 entries. One is for sale price, one is for depreciation, and one is for recording the profit or loss. What is the entry for machine sold? Bank account debit to machinery. Here it is on 1st of January. Second entry will be depreciation. Depreciation account debit to machinery. No depreciation, sir. Why? Because it is sold on the first day of the year. And loss, profit and loss account debit to machinery. Now we have this machine with us, and we have purchased one more machinery at 1,50,000, and we have purchased one more machinery for 1,50,000. So we have two machineries, one lakh which is purchase in the past, and 1 lakh 50 today purchase. So machinery account debit to bank on 1st July. Now on 1 lakh 10% full 10,000, and 1 lakh 50 10% 15,000, half is 7,500, so total 17,500. Depreciation account debit to machinery. Here it is. So this is the balancing figure. So 23 got over. Now in 24 they decided to change the method of depreciation. Yes, in 24. Now they are charging WDV method. So whenever there is a change of method, prospective effect should be given. Prospective effect should be given. So 2,17,500 into 15%. 2,17,500 into 15%, which gives to 32,625, and this is the balance carried down. So this was a very simple question on depreciation, guys. They purchased 2 machineries in year number 1. They charge depreciation. Year number 2, nothing happened, so again they charge depreciation. Year number 3, they sold the machinery which was first purchased for 1 lakh. They recorded a loss on that transaction, and again one machinery was purchased in year number 3. In year number 4, they decided to change the method of depreciation from straight line to WDV, and they recorded the depreciation as per the revised method or the new method. That's it. And now we are going for the next question, that is bills of exchange. Mr. Kabir accepted a bill for 10,000 drawn on him by Somerville. So Kabir is the drawee and Somerville is the drawer. Let's check whether in whose books they have passed entries. In the books of Mr. Somerville. So in the books of drawer. Fine. So I have a habit of giving numberings. How many entries will be passed in particular problem? Let's see, guys, what is asked. Right? Here. First entry will be drawn and accepted. Mr. Kabir accepted a bill, so Somerville draw a bill on 1st August for 3 months. This was for the amount which Kabir owed to Somerville. Means Kabir had to pay 10,000. For that reason, Somerville draw a bill on Kabir. On the same date, Somerville got the bill discounted. So entry number 2 will be bill discounting. Entry number 2 will be bill discounting. On the due date, Kabir approached Somerville for renewal of bill. So guys, whenever renewal comes, we have to go for 4 steps. Dishonor, interest, part payment, and new bill. You have to go for 4 steps. Dishonor, interest, part payment, new bill. Mr. Kabir agreed on the condition that 2,000 to be paid immediately along with interest on the remaining amount at 12% per annum for 3 months, and that for the remaining balance B should accept a new bill. This is all procedure of renewal, that he is paying some part payment to be paid immediately along with interest. So guys, here he is paying, Mr. Kabir is paying 2,000 and the interest along with the part payment only. These arrangements were carried on 31st December 2024. Kabir became insolvent. So now he becomes insolvent. So insolvency comes 2 steps more. One again dishonor, and then insolvency entry you have to pass. So total 8 entries in this sum, guys. Let's go for the entries, guys. Very simple sum of bill of exchange. First entry, bill drawn, bill receivable account debit to Mr. Kabir. Here is the solution. 1st August. Yes. Amount will be 10,000. Number 2, discounted bank account debit, discount account debit to bill receivable. Amount is given 9,800, 210,000. Fine. Number 3 is dishonor. I will say Mr. Kabir account debit to bank with 10,000 rupees, and on the due date, basically 1st August was the date of bill plus 3 months. So 1st August plus 3 months, 1st November plus 3 days, which comes to 4th November. Fine. Then dishonor done, then Kabir to interest, Kabir account debit to interest. Now for this, I'll prepare one working note with you guys. What was the bill amount? 10,000. I'll split into 2 parts, part payment and new bill. He paid part payment of 2,000. So the balance is 8,000. Interest is always charged on the amount which is not paid by the drawee. So 8,000 will charge interest. On 8,000 will charge interest. 8,000 into what is the rate of interest, guys? 12% for 3 months. 12% into 3 divided by 12. We'll get 240 rupees interest. 240 rupees interest. And interest is paid along with the part payment only. Because here it is clearly mentioned. We'll check the lines, guys, for you people. I'll clear this everything. Here, let's read this. Kabir agreed on the condition that 2,000 to be paid immediately along with interest. So interest is calculated on the amount which is not paid by the drawee. But interest comes with whom? That question will mention. So interest here is coming along with part payment. So 2240 will be the part payment amount, and this will be the new bill amount. So we were on dishonor entry. It is Kabir to bank 10,000, then Kabir to interest 240 rupees. Then bank account debit to Kabir 2240 and bill receivable account debit to Kabir 8,000. So they have combined here bank account debit, bill receivable account debit to Kabir bank 2240, bill receivable 8,000, 10,240. And then again Kabir becomes insolvent. So again we have to pass an entry for dishonor. This was 4th November. 4th November plus how many months, guys? New renewal was done for how many months? Let's check, guys. On 31st December, he becomes insolvent. Fine. So no need to calculate the dates. The dates they have given. Kabir account debit to bill receivable. It will be 8,000. The new bill is of 8,000. And then how much he paid? He paid only 40%. So the entry will be bank account debit, bad debts account debit to Mr. Kabir on 31st December. 8,000 is the amount which Kabir was supposed to pay into 40%, 3,001, and balance is bad debts. So very simple sum of bill on bills of exchange, guys. So we have covered 3 sums in this video: inventory valuation, then we have covered depreciation, and then bills of exchange. I hope you have understood the entire sums of the RTP till now. We'll come with the next video on the balance sums. Thank you, sir.